Failed auction excess or extreme, what is the difference between that, right? That was the question. We are trying to find out about failed auctions, excess, extremes, all right? Always remember, a failed auction will happen beyond an extreme. So this can be range extreme, or like yesterday's high, yesterday's low. It can be weekly high, weekly low, daily high, daily low, monthly high, monthly low. All these references, which are very, very visual, clear, easily observable. All right. If it is a range, that also works. All right. So I'll give you an example. So here we had a 2-day range. This was a 2-day composite. All right. 5th and 6th December. Then what happens? We look beyond one end of that range. So we go below this range of 2-day composite. We do not uncover any more supply and we get back inside the range. Then what happens? We consolidate some more and then we go towards the opposite end of the range. This is a failed auction. So what it tells me is that market tried to auction lower, did not uncover new supply. Buyers came in, pushed the auction higher, and now we are going towards the upside. How far will this continue? It depends on trade facilitation. Trade facilitation becomes poor. We come and try to fill in low usage areas. Now, what basically we are doing is we are creating another range. So, like we had this 2-day range, now we have, this is the 4th day this range is developing. So, we can get a failed auction below this low or above this high, and the range will continue to develop, or it will break out to the other side. So if you get a failed auction towards the top, we might break to the downside. If you get a failed auction towards the bottom, we might continue to move higher to the upside. That is how this thing will develop. All right. Excess. All right. What does excess mean? Excess means that you know a sudden rejection, or if the auction has gone too far to uncover opposite activity, or the activity in the direction of the trend completely dries up, right? An example would be this C period. I'll tell you how. Anyways, the market is in a very runaway strong uptrend, right? So what is happening? We are getting gap after gap, nice price coverage, close near the highs. Next day opens a little higher, again continues strongly until it reaches this point. What is so special about this point? Nothing. We reach this point and suddenly what the auction realizes, that buyers have dried up and sellers are coming in. So since the buying has dried up and sellers are coming in, profit booking, whatever may be the reason, the market moves lower very, very sharp. And as soon as it moves lower sharply, it leaves behind an excess. What does this mean? That auction just went too far and that level was unsustainable. So whenever you reach an unsustainable level and there is nothing to the left hand side in the near future, like, okay, if 1 month back there is some price action here, that is all right. But if you look at this, is this an excess? Now again, this is an excess in context of this 2-day range. But if you look at a little bigger picture, what we have this price action here. So is this an excess on a slightly higher time frame? No. For a 2-day composite profile, yes, this is an excess. Make sense? So if you look at this 1 to 3 day, is this an excess? Yes. But if you look at a bigger range as such, so let's say if I draw this, and now if I call this an excess, will it be right? I don't think so. Why? Because this is happening in context of this 4-day sideways development. This is happening in context of this spike. So we just moved above the spike, no new demand, and we come back down. So this is not an excess. This is an excess. You need extremely dynamic price movement to call it an excess. This is more like poor trade facilitation, consolidation. We go higher, come back down. So this can be some sort of a stop hunt, something like that. But it's not an excess. This can be called as a tail. This can be called as a tail. This is a buy tail and this is a sell tail. That's it. It's not an excess. This is a excess, right? And if you find acceptance inside the excess, that is actually not good. So this acceptance may be hinting towards higher prices. Whether it happens or not, time will tell, but that can be what is happening here. So that is how you differentiate between excess and tails and failed auctions. And again, don't get too involved into terminology and the original definition that you know excess or tails mark end of one auction, start of another. So let's say this auction has finished. Now has a